All right, welcome back to Inventory Watch for December 2nd, 2023. This is where we go over all of the weekly inventory for the housing market for both homes for sale and rental market. And boy, we have some fun things to talk about. We saw some relief in the interest rates in the past week. I think we're at like a full point lower in interest rates than we have been. So that's great relief for home buyers. And today we're going to go over the regular stats. Plus, we're going to go into the top 5 buyers markets around the metro to kind of coincide with the new lower interest rates. So let's jump right into it and get into presentation mode. And as always, we start off with housing data and the inventory. So let me figure out how to make my head smaller. Here we go. Okay, so new listings. This is where we always talk about, how much inventory, brand new, fresh inventory is coming to the market. You can see here last week was Thanksgiving. Or the week prior was Thanksgiving. So we always see Thanksgiving inventory kind of take a dive. So as you can see, we are still currently on inventory is still really, really low. Not a lot of new fresh inventory coming to the market. And as you can see here, like September, we had 80,000 or 8,000 fresh listings. October, we had 8,200 fresh listings. And in November, we had just under 7,000 fresh listings come to the market. And going into the holidays, again, I think I've been saying this for the past few weeks, that the holidays are always slow with new listings. People will tend to come to the market after the holidays, and that's when we'll start to see the inventory come back for 2024. So keep an eye on that. So we did see less listings. And what is that doing to our market? We always talk about that with the pending ratio. So we'll talk about that in the next slide. But here's our active total inventory. We had last week, we had 16,060 active listings on the market. And now we're down to 15,948. So about 80 listings we did lose because we're not seeing more inventory come. We'll continue kind of to see next month inventory probably go down a little bit slightly again. And then again, after the new year, going into January, we should see inventory start to come back to the market. Nobody's really thinking about buying and selling. The guys that are out there buying and selling right now are very serious buyers. They're moving for very specific reasons. So if we go into our average list price right now is $675, and price reductions are actually down 6% as well. But it's still a very large part of our market. Almost half of our market has been seeing some kind of price reduction. So let's go into pending and contingents, because we saw where we were on the supply side. Supply is kind of ticked down just a slight number, like maybe 60 listings. But we did see buyers come down even more. So that will keep the market kind of sliding down into the buyer's favor. And how we track that is with the pending ratio here, or this pending stat. So we have 38% was where we were at last week. And the higher this pending percentage is, the more in favor, the more like sellers have control of the market. So like the closer we get to between like 40 and 50, the more control sellers have of this market. The lower it gets, the more buyers have control. And we're at this, really fine line of like, just a few more listings and the buyers will completely take control, and just a few more buyers out there and the sellers will take control. So that's kind of where we're at. But we did go down like 1 point, I think we're at 37.4%. So we did go down a full point in the pending percentage, it back into like sliding deeper into the buyer's favor, which is why I want to talk about the top 5 buyers markets today. So we did see a drop in buyers 3.4% week over week. The last 30 days, the average under contract price has been $597,000. So that's the average. let's look at sold homes. So sold homes, we have where we ended for the month. So we sold 4,628 homes in the month of November. We've been averaging around 5,000 homes, back like October and September and things like that. And it's kind of trended down because November is not really a full month. There's a holiday in there. There's less buyers around the holiday. So it's always something that kind of trends down going into the end of the year. If we're going to compare November to last year, we are down 6%. Last year, we had 4,928 buyers like that closed their homes. So about 300-ish buyers we lost this year compared to last year, which is why we keep sliding into that buyer's market, even though inventory is so ridiculously low. Like 16,000 homes on the market is not a lot for the Phoenix Metro. We do need to see that inventory come up if we want to continue to see affordability hit our market. But the fact that interest rates are high and buyers are abstaining from the market has kind of been the saving grace in pulling some of that affordability back, but not a lot. So in the last 30 days, the average sold price has been $573,000. So let's go into the top 5 buyers markets. So these are markets where buyer demand has absolutely fallen off a cliff and inventory is heading in the other direction, right? Where inventory has been kind of going up. So Laveen is the first market. It's market number 5. The median list price, and this is the median, not the average. So that means half of the listings in Laveen are under 371,000 and half of them are above 371,000. So there's a lot of listings under 371,000 in Laveen. And this is number 5. And so affordability there is, we've seen a lot of price reductions happen in Laveen. So we're starting to see affordability come back to Laveen. Went the wrong way. Let's look at number 4. Number 4 is going to be El Mirage. El Mirage has a median list price of $370,000. And it's also another market where demand has just absolutely fallen off a cliff. The buyers there are like nowhere to be found. So if you're really interested in living in the Northwest Valley, El Mirage is your bet. Number 3 takes us to the Southeast Valley. So around the Queen Creek area, we have Santan Valley, just on the other side of Queen Creek in Pinal County. The median list price in Santan Valley now is $355,000. So that means that half of the listings are under $350,000 in Santan Valley, and there are price reductions happening there. So you can definitely probably find a deal around Santan Valley. I know there's some builders still out there probably offering some good interest rate buy downs on new construction out there. So there are some deals to be had in Santan Valley. Number 2 is going to be Tullison. The median list price in Tullison is $327,000. So that means, again, half of the listings in Tullison are under $327,000. So there's definitely some deals to be made in Tullison if you are looking. I don't know how many new construction is out in Tullison. I don't think there's much. So definitely, negotiate with the sellers there to see if you can get some rate buy downs. With these, if you can get under 200 with a rate buy down, like you're probably looking at a really good monthly payment, like $1,800. And the number 1 buyer's market here around the Phoenix Metro is Maricopa. Maricopa, the home buyers, I don't know where you guys are at, but you're not in Maricopa. Maricopa prices have been dropping pretty quickly. Buyer demand is just absolutely fallen off a cliff there. The sold score in Maricopa is like a 24. So it's really something to be said about Maricopa. The median list price is $305,000, which means that again, half the listings are listed at up to $305,000. So $305,000 or lower is half of the inventory in Maricopa. And I wanted to show you one I found on this website here. So this is a new construction in Maricopa, and it's listed at $299,000. the estimated payment is $1,847. And we just had a whole like point in the interest rates drop. So a lot of these builders are still doing rate buy downs. So this is saying 1,800. Let's see what interest rate. I don't know what interest rate that they usually calculate like close to what's being offered by major lenders. So, and they usually include like the $70 in the HOA, like in this monthly payment. So it's probably worth something. Like if you're looking to buy a brand new house with an $1,800 payment, I would say like go down and check out these new constructions. You can see they've got granite countertops, brand new tiles, some pretty decent cabinets going on in here, stainless steel appliances. So it's definitely something to look at if you're in this affordability range here. And this is a 3-bedroom, 2-bathroom, 1,300 square foot home in Maricopa with a $70 a month HOA, which again is usually estimated in this payment on Zillow here. So reach out. I might have the list. I'm not sure what builder this is, but I get all of the lists from the builders with their interest rate buy downs and their buyer concessions to help get people into homes. So reach out if you are interested in this, but just note as well, there's been 87 saves on this property, over 1,000 views, and their algorithm says that this home is likely to sell faster than 98% nearby because it is brand new and under 300,000. So something to consider if you're out there looking at homes. Those are the top 5 buyers markets right now. So if you're looking to rent, right, you could probably get a 2-bedroom for $1,400, or you can get a full home with a garage and 3 bedrooms for $1,800 right now. So something to consider, something to think about in the buyer's markets. Speaking of rentals, let's go into the rental market and see what's happening. Let's go back into presentation mode. If you find any of this valuable, guys, please give my channel a like, subscribe to the channel, let the algorithms know that this is good data for you, that you appreciate this. Let's go back into presentation mode. And let's hit the rental market. So what we're seeing in the rental market is something similar to what we're seeing in the housing for sale market, right? Like this is new inventory, fresh listings. You can see it's been like trending down over the last few weeks, which is normal again for this time of year. It's the end of year. And so going into 2024, how we start off with sellers coming to the market with their listings for both rentals and homes for sale is really going to tell us what 2024 is going to look at. So I'm patiently waiting for the new year and all the new inventory that's going to be coming. But what we're seeing right now with the rental market is active listings at 7,154. We've kind of been hanging out between like 7,300 and now we're down at 7,154. So rental inventory peaked here. I think we saw the highest inventory brand new listings come in August, and then we've been trending down since August. Pending and contingents, we had 416 active renters put something under contract this week. It did actually, it's odd because this many people put their contracts in the week of Thanksgiving, and then we saw kind of opposite of what we saw in the housing market. But I guess people wanted to secure their deals to have Thanksgiving. So 416 this week. So it's been kind of a hit or miss with the rental market. So we were starting to see demand kind of pick up the first few weeks of November, which is odd for a holiday month. And so going into December, we will kind of see, we had started to see prices come down since July. Like the average rent in July was like $2,400, and we saw rents come down as low as $2,150 for an average, and then kind of spike back up a little bit. So we went from like $2,500, and we've been hanging out at like the high 22s as far as under contract pricing goes for homes, like actually rental homes. And remember, my data is only homes, not homes and condos that are for rent, not really apartment complexes. So I can't compare to that. So it's really only homes and condos that are in this data set. So if we're looking at the sold rental inventory, in October, we rented 2,400, went under contract. In November, we had 2,253 go under contract. And the average sold price in October was 2,308, and the average rental price is 2,320 this month in November. So again, we're hanging out around this 2,300 mark. And I don't know if we're going to push, like if this is like a new kind of plateau here, and if something's going to happen, we're going to go back down. Affordability, I feel like, still needs to come back to the market. So hopefully we'll get this average down a little bit for affordability sakes. I'm sure the landlords like that, the fact that it didn't continue to plunge down. And looks like that was the end of what I got here. So I'll leave the links to look at homes in those top 5 markets. And if you have any questions, reach out.